No, you're li we're recording now.
Okay. Okay. Well, okay. Here we go. Hello everyone. I'm RG Ernest with the Low Income Taxpayer Clinic, Legal Aid of Arkansas, and I'm here today with Masood Chichani. Masood is the director to the LITC of Taxpayer Help Center located in Northridge, California. I'll let Masood tell you some more about himself here in a moment, but for now, I wanted to briefly introduce the topic we're going to be discussing today. We're going to be talking about taxes and summer jobs, specifically with how those summer jobs for teenagers. And we believe that the sooner that kids can start learning about taxes, the better. And one of the ideal times for kids to learn about income and employment taxes is whenever they first start their summer job, because that's whenever they gain firsthand knowledge of what it's like to make income. So we're going to talk about some different kinds of jobs from a tax perspective, how taxes get paid, um, how tax returns get filed, and just some other general issues that teenagers who are working would be interested in knowing. So now I'm going to turn things over to Masood, who is going to introduce himself and talk a little bit about why it's so important for kids to understand taxes. And he's going to start us off in our presentation. Thank you, Masood.
RG, thank you so much for the introduction. Hello, everyone. I'm Masood Chatani. I'm the director of the Taxpayer Help Center's Low Income Taxpayer Clinic in Northridge, California. So some of you might ask, where is Northridge, California? So Northridge is in the city of San Fernando, and it's about 22 miles northwest of downtown Los Angeles. So let's move on to the next slide. Thank you so much. So before I begin, let me congratulate everyone who was able to find a job, and also good luck to those who are actively looking for a job. Because some of you may have never filed your income taxes, so I think it's essential for you to understand that in the United States, the agency responsible for collecting taxes for both businesses and individuals is the Internal Revenue Service, the IRS, and they're also responsible for processing the tax returns that you are going to file in the next year. So let's dive into understanding your job type, which really has to do with worker classification. How is the business that has hired you, how are they going to classify you? One way for them to classify you is as an independent contractor. If they do that, then you're considered being self-employed, as if you were in your own business. For example, we have students that we help prepare their income taxes in a wider clinic. They work for DoorDash. So DoorDash, for example, will classify you as a self-employed person, which means that no taxes are going to be withheld from the checks that you will receive, and you are responsible to pay your own income taxes. And also, if you receive more than $600 during the year, those companies will issue a Form 1099 NEC. And the NEC basically stands for non-employee compensation. Non-employee because you are not considered to be an employee of that company. You are considered being like a self-employed individual. So since you are responsible to pay your own income taxes, what should you do? So we suggest that throughout the year, you keep track of your income and expenses, keep a record for your tax deductions so that you're ready. When you're about to file your income taxes next year, you'll have everything documented. Usually for a small self-employed person, It's very simple. For example, if you use like an Excel worksheet to keep track of the income and expenses, if you want to get a little more sophisticated, you may get a subscription of QuickBooks, basic or zero. There are tax programs out there that will help, track the income and expenses for you. Also, we recommend that you consider setting aside about 25 to 30% of your earnings for taxes. Don't spend it all because, we've had cases in our clinic where, we prepare these income taxes, for example, for a DoorDash driver, and they haven't set aside anything for those income taxes, and suddenly they have to now pay back to the IRS. Okay, so this is one type of classification. You being classified as being self-employed. Now, the other more typical classification, which probably most of you will be classified as, would be as an employee. Okay, so here you basically work directly for a company. For example, you might be a McDonald's crew member, or you may be working for a grocery store as a stock clerk, or maybe a retail store like Macy's, for example. So now you are working directly for a company. You're not self-employed. And in this situation, the employer is responsible to withhold taxes from your paycheck. And at the end of the year, they are going to issue something called a Form W-2. Now, let me just talk about the date and timing of the issuance of these forms, the W-2, and also the previous one, the 1099. After the year ends, so for example, the year ends on December 31, 2025, the employers have until January 31, 2026 to send these forms to you. Okay, so you'll receive, in this case, a W-2 form for the year 2025. Now, the question here is that since the employer is being asked to withhold, taxes from your paycheck, how do they do that? Do they just randomly or arbitrarily, pick and choose how much to withhold, from your paycheck? No. The Internal Revenue Service has a form called a Form W-4, and the W-4 basically lets the employer know how much tax to withhold. So let's dive into the Form W-4 and see what it looks like. On the next slide. So this is what a Form W-4 looks like, a W-4 Employees Withholding Certificate. Now, it looks fairly complicated, but it really isn't. I mean, for you, being in most cases students and having summer jobs, all you have to do is, put down your name, social security number, and your address. And the key thing which helps the employer decide how much to take out is basically the filing status. So the filing status basically means that, are you single? Are you married? Etc. In cases like yours, I think in most cases, you'll be a single taxpayer. Okay, so you'll check that box off. And then if you're working two jobs, obviously that raises your income, and that also raises your income taxes. Claiming dependents. I don't think in your cases, you'll be claiming any dependents. It may be the other way around, that your parents might be claiming you as a dependent. So this may not apply to you. You can also have your employer take out some extra income taxes. So there are voluntary taxes that can be withheld on this. You can actually let the employer know right there in step 4, box C, extra withholding to have some more taxes taken out. The bottom line is this, that the W-4 is really necessary for the employer to determine, how much tax has to be taken out. The IRS has really a fantastic tool that actually can help you, because if you think that this is too complicated for you, all you have to do is go to irs.gov and look for the tax withholding calculator. So the IRS has a tax withholding calculator tool on its website, and it's going to basically guide you through the process of how to complete this Form W-4. It's going to ask you questions like, what is your filing status? And I think you should actually have a pay stub, which is actually a statement of your earnings and deductions in front of you, if you don't have one at that time. So that would be actually quite helpful. Okay, so the next slide. So now you worked really hard, for let's say 1 week or 2 weeks, and now you're ready to get paid. So it's payday, and we recommend that you receive your pay as a direct deposit into your bank account. And therefore, if you do not have a bank account yet, we suggest that you open up a checking account where you can receive this pay as a direct deposit. Now, by law, the employer is also supposed to provide you with a pay stub. A pay stub is basically a statement of your earnings and all the deductions of taxes withheld by the employer and the net amount of the check which is going to go to your bank. So let's dive deeper into this, the components of this pay stub on the next screen. So what really is all this information on this? And I think it's really essential that, especially for people who are really working for the first time and have never seen a pay stub, they really should understand, what's on this. So let's take a look at that. On the left-hand side, for example, it says salary, and these are the earnings. Let's say you work 40 hours and you work, for example, at a rate of, let's say, $20 an hour. Whatever that is, the amount of your salary is basically the gross amount of your pay before any taxes taken out. Okay, so the salary, the $1,892.67, is essentially the gross amount. The gross means without any deductions. Now let's take a look at the right-hand columns, deductions. Here you will see all the taxes that the employer has withheld from your paycheck to arrive at the $1,399.28, which is going to, let's say, your Bank of America bank account. So the $1,399.28 is essentially the net amount. So the net amount is the gross amount minus all these taxes that have been taken out, and you receive the net amount in your bank account. So let's take a look at these deductions that they have here. So the first one that you see is something called FICA, FICA. And basically, FICA stands for the Federal Insurance Contributions Act. And this is a mandatory payroll tax, which consists of the Social Security tax and the Medicaid tax at a fixed percentage. And those are the amounts that are shown there, the $117.24 and the $27.42. Then you also have the federal tax that the employer has withheld. Now, keep in mind that this federal tax was based on the filing status that you put down on the Form W-4 that you have provided your employer. And based on that, they took out $192.71. You also have SIT, which is a state income tax. So if you live in a state where they have state taxes, they'll deduct that also from your paycheck. And for example, some other deductions like life insurance, which you probably won't have, or other types of deductions like retirement benefits, like a 401k plan. And after all these deductions, you will get the net amount of $1,398.28. So now this goes on all the way. Let's say that you only have a summer job and your job ends, let's say, in August or September, and that'll be the end of your, you know, the working period. What happens then? What happens at the year end? So for that, RG, can you please let us know, what basically should they expect at the end of the year?
Yeah, thanks, Masood. So earlier, Masood touched on and went into some detail about the being a 1099 versus a W-2 employee. And so what happens after the end of the year is you are either going to get this 1099-NEC or you're going to get a W-2 form. And so for the 1099, this is the one where if you're self-employed, what usually will happen or should happen is that the person who paid you for your labor, for your services, is legally required, or usually legally required, to to submit to the IRS a 1099. And they're also, of course, required to provide that to you and to mail it to you. And that applies as long as you've earned at least $600. And at that point, you're going to take that income that you show on your 1099 and you're going to report it on your tax return on a special schedule called a Schedule C. And the other thing, though, that you need to be aware of is that, and you might recall this from the last slide that Masood was discussing, he showed you there on your pay stub how when you're an employee, your employer is withholding employment taxes for you, described as FICA. Well, when you get a 1099, there's no withholding of not just of income taxes, but there's no withholding of employment taxes either. So you will need to be prepared when you file your tax return to pay your self-employment taxes for Social Security and Medicare. Um, the the other thing to note is that even if you don't get a 1099, you may have an obligation to file a tax return and report your income. And so there are certain types of jobs that you may do where you don't receive a 1099. And so you may be legally required to file a tax return and pay taxes. And in a moment, I will talk some about whether or not you have to. Um, so the other form, I'm going to move on now to if you're an employee. Instead of getting the 1099, you're an employee and you get a W-2 from your employer. And just like that 1099, your employer, because they've paid you money for your services, they are legally required to send a W-2 to the IRS and to provide you with a copy of that W-2. And like what Ms. Sue discussed, that W-2 will have your total income amounts for the year on it, and it will have your total withholding, including your FICA withholding on there. It'll also have state income tax information on there. And so when you file your tax return, you will need to include a copy of your W-2. And you will also need, if you're in a state that has state income taxes, you will need a copy of your W-2 on your state income tax returns. And so that is what we call it information reporting. That is what your information reporting looks like, whether you're getting a 1099 or a W-2. And so it's a really important tool for whenever you are going to file a tax return. So moving on to the next slide, why file a tax return? Um, so one thing I mentioned is that if you don't, just because you don't receive a 1099 or a W-2, doesn't mean that your income is not taxable. So you may still have, regardless of whether you receive those forms, you may still have an obligation to file a tax return. So if you earned money in 2025, um, and you were an employee and your employer withheld from your taxes, it may be to your benefit to file a tax return because you can get a refund of the money that was withheld. So even though you may not be legally required to file a tax return, you should file that return just so that you can get your tax refund. So those are some things to consider. So this fleshes out a little bit more detail about filing your tax returns when it's time to file. First off, you need to figure out, do you need to file? And so for 2024, there was this threshold that if you made wages, I'm going to keep it pretty simple, but if you made wages that were a little just shy of say $15,000, if you were over that $14,600, you would have a filing obligation. Also, if you were self-employed, if you made over $400, you would have a filing obligation because you would owe self-employment taxes. The second thing to consider is your filing status. And Masood talked about this a little bit earlier. For most of the teenagers working summer jobs, your filing status is going to be single in almost all cases. There could be exceptions to that, but it will usually be that your filing status is single. The other thing I'll note is that you can be someone else's dependent. It's usually going to be your parent or your guardian, and you still may need to file tax returns, and they can still, in most instances, still claim you as a dependent. So don't think that because your parents are filing a return and claiming you as a dependent, that you should not file a tax return or that you don't have to file a tax return. The criteria for being a dependent is that you're under the age of 19 or 24 if you're full-time students, and your parents provide over half of your financial support, and you live with them for more than half of the year. So this next slide goes into a little bit more detail about what I just discussed about being a dependent and that you do need to file. So this other slide now, this is the actual tax return that you're going to, or that you will need to complete, or that will be completed for you. And kind of like that W-4 that Masood was talking about, it's not as complicated as you might think. And it's especially not as complicated if you use software to prepare the return, or if you go to a tax return preparer to help you with that return. So now, when you're filing the return, if you're lucky, what you hope for is that you're going to have a refund. And ideally, what has happened is that your employer, if you're a W-2 employee, has not under withheld. And if they've under withheld for you, you may owe money with this tax return. But if they've over withheld, which oftentimes happens, and probably usually happens, is that you will be entitled to a refund. And so you can get your refund either by just asking for a paper check to be mailed to you, and that's the old-fashioned way. But it's also easiest to just direct that refund into a bank account. And the IRS tends to issue most of its refunds in less than 21 days. All you really need to know is your bank account's routing number, or your bank's routing number, and account number. And so at this point, We've talked a little bit about filing the return. I'm going to turn it back over to Masood to talk about your different filing options, especially considering uh, in his low-income taxpayer clinic, they work hand in hand with a Vita clinic, and he will be able to explain to you how Vita clinics work.
Thank you, RG. So one thing for sure is that please do not try to manually complete any of those tax forms that RG was showing you, the 1040. We've had cases, for example, I remember last year, there was a parent actually who came in with the student taxpayer, and they had completed the tax return manually for some reason. I don't know why. And there were several mistakes on that. So we had to redo everything for them. So how do you file? Electronic filing is the only way to go. Okay, and there are multiple ways you can do that. So the IRS is really helpful, and they have a free filing system online. It's called IRS Free File. And what the IRS has done is that they have collaborated with various software companies, for example, like TaxAct, TaxSlayer, free tax filings online, etc. And they have actually provided those links on the IRS free file on their website, where you can actually go into that and they actually prompt you. There are questions that they'll ask you, for example, what is your filing status? Were you self-employed? And if you were self-employed, it's going to prompt you, for example, as to deductions. Okay, so these are trusted IRS partners that can help you actually file these taxes for free. There are guidelines in terms of the income, and for most of you, you are going to fall below that because the maximum on these free file packages is about $84,000 a year. So I'm sure that in the summer, you're not going to make more than 84,000, in like a few months. The other thing you have to keep in mind is that in some cases, the state tax filings on the IRS free file and those offerings by the IRS partners are not free. Some states are free, but in, believe most cases, you have to pay, I believe, about $39.99, about $40 to file the state taxes. That's why, I would always recommend students to look up a Vita clinic, because the Vita clinics that, like the one that I operate in Northwest California, it's a volunteer income tax assistance clinic. We are actually under the ambit of the IRS, and we are fully trained. We have volunteers who go through a certification program, and until they are fully certified, they cannot volunteer and help prepare those taxes in our clinics. So these types of clinics can be of two types. It can be an academic institution offering this Vita program in the state that you reside in, like a state university, for example, or a community college. For example, other nonprofits like Goodwill or AARP, they offer these types of programs also. And you also have clinics like ours. We are a standalone nonprofit organization, and we offer free tax preparation for taxpayers who make less than about $65,000. So, for students, this is an ideal place to visit. And I would actually recommend this, even before the IRS free file, because there you may end up paying about $40 to the state. And the Vita clinics are totally free. Another option that is not listed here, some students who actually come to our clinic in another year, they use, for example, TurboTax. So TurboTax is a program which is offered by Intuit, a company nationwide. They usually charge about $100 and some odd dollars. So again, you have to pay a fee for that. So again, I go back to the Vita clinic. do visit, look up on the IRS website. They have a listing of all the VITA clinics in your area, and you can easily call and set up an appointment. Some of them are open only through April 15th, which is the tax filing deadline, but our clinic is open all year round. And the last option that you have is obviously you can actually hire someone, a tax professional, uh, and these professionals could end up charging you $300 to $400 for a basic tax return. And like it says here, they provide audit assistance at an extra cost, and they actually will file for that one fee. They will file both the federal and state income taxes. Okay, now, so let's say that, regardless of which option you used, you file your income taxes electronically and you are expecting a refund. So what happens then? So the IRS has a tool on their website. If you go to irs.gov, they have a tool called Where's My Refund? You can track your refund on this tool, but you have to wait. You just can't file today and like the following morning, if you go in there, there's nothing's going to be in there, because it takes some time for the IRS to bring this up into the system. So although it says 24 hours, I would say a little longer than that. And then you can actually go back into the IRS Where's My Refund tool, and you're going to need your Social Security number, your filing status, the exact amount of the refund, which is going to be on the Form 1040. And then that tool can tell you exactly where in that timeline, is that at? Has it been processed? And usually when the refund is processed, fully processed and issued, it's going to say that you should be receiving this in your bank account by so-and-so date. So like RG said, direct deposit is really the way to go. Direct deposit and electronic filing. So if you don't have a bank account, we strongly suggest you do open up a checking account, with a bank. And, although we talk about paper filing, that is not recommended because let's say in the event that you do paper file, then it's going to take a much longer time, to get your refund back. So again, electronic filing is the way to go. And as RG mentioned previously, that most refunds usually arrive within 21 days, unless there's like a mathematical error or some other mistakes that were made. So within 3 weeks or so, a direct deposit should hit your bank account. So I think we provided a lot of useful information, RG, to the audience, and I think they're equipped now with some very useful information. And I'm going to pass it on to you to summarize and close this session.
Yeah, thanks very much again, Masood, for helping and providing such a wonderful presentation today. And I do think that it's very helpful. And just as you had started out your presentation, as you noted, it's if you've got if you're a teenager and you've got a summer job this year, good for you. This is it's a great learning opportunity, and it's an opportunity to learn about taxes. And so I hope that this has been helpful to all of you. You can see here on this last slide the contact information for both the LITC at Legal Aid of Arkansas and for also for the Taxpayers Help Center. And so reach out to either one of us if you have any questions. And we appreciate your time today. And again, thank you, Masood.